here, Mr. Jimmi Lewis. He's the principal of VOI Insurance. I've known Jimmy now for over 10 years. Started off when I was buying properties at the courthouse steps. Our companies were actually related. So
Yep.
while I was bidding on the properties, Jimmy, you were in the war room. Not sure what you were doing. Maybe you explain a little bit what you were doing. We were buying those foreclosures.
Oh man, that was a blast.
It was so much fun.
I got to do a little bit of everything actually, all the aspects. So I too was also down at the courthouse steps, down in Norwalk mainly. After the courthouse steps, we got to sometimes take the trust deed receipts and go and knock on the doors of the homes we just bought, introduce ourselves and let them know we're the new owners. Worked out some cash for keys. When you joined, I believe I was helping with a lot of the title research. We had a nice subscription to, I think it was like Title Point or something. And so I became a hack title researcher to check out liens on properties before, to help determine what our bid was going to be, and also help deploy the real estate network that we had so we could get a visual of the property before placing a bid. Probably the coolest thing that we did when we were there is I found some developers in India, and we developed some really cool software that would hit on all the trustee websites. And as you may know, a lot of the best properties are found via last minute reductions, where the trustee or whatever the company is that was doing the auction would reduce the asking or the opening bid sometimes moments before they went to auction. And so I would sit there and constantly just hit the trustee sites myself, manually refreshing them and trying to find reductions, and actually develop some software to ping on those. And that was awesome, because some of the big outfits out there would, we'd come in with some bids that they didn't have the intel that we had, that the opening bid would be reducing, and we just come in and we swiped a lot of properties away from a lot of the big competitors using that program that we developed. So, but a little bit of everything, I did all aspects, I'd probably say, except for managing any of the construction, the renovation, but it was fun. I think in the year and a half I did it, we did 164 properties, if I recall.
Yeah, it was definitely fun times.
It was wild. It should have been a reality show.
I heard we were asked to, but the partners decided not to. It's just probably for the best.
Probably,
because I could see us embarrassing ourselves.
Yeah, but we had some good stories, though. We had some good stories.
For sure. Yeah. So let's talk about what your specialty is, which is insurance. So let's talk about VOI Insurance and just what it does, and then we'll talk about it from an investor's perspective.
Sure. VOI Insurance, my agency, I opened it up in 2010. Actually, originally with the same company that Rick, or parent company that Rick was a part of. We're a full service property and casualty insurance agency operating in California. We work with, being independent, we work with dozens and dozens of carriers and have access to hundreds of markets to source insurance for a variety of needs, from personal insurance, commercial insurance, obviously flippers and investors. We also do a little bit of health and a little bit of life as well.
Okay, so let's just kind of jump into it. So from a flipping and development standpoint, right? So if you're looking to flip homes, buy them, fix them up, resale, or ground up development, what are the different types of insurance policies like I would need? Like, I'm not a contractor, but I want to start flipping houses. What do I need to make sure my ass is protected?
Good question. It depends on the scope of your project. But in short, you need some type of property coverage. You'll need to make sure that the actual renovation or construction operations are covered, and need some liability coverage. So diving into that, there's a few different options. So basic, if you're just kind of a paint and lipstick type of flipper, a lot of times a vacant policy, property policy with a renovation endorsement, sometimes called builder's risk endorsement, would work just fine. For bigger projects where you're working on the existing structure, but maybe you're adding square footage, doing some, structural, type of structural changes, you probably want to have a builder's risk policy. And if you're scraping the ground clean and building up from the ground, you're going to want a ground up course of construction policy. And many of those policies also include liability, but some don't. So you absolutely also want to have general liability protection as well.
What
And so depending on what you're starting with, a combination of those policies will take care of you.
got it? What do you mean by endorsements? Like, is that different than a traditional insurance policy? Is that kind of like a rider or something that goes on top of it?
Yeah, endorsement's a fancy insurance word for like an add-on.
Okay.
Endorsement just changes the terms of the policy. A true vacant policy typically isn't geared to cover renovations that are occurring. However, some of the carriers that offer these vacant programs offer a rider that you can add to the policy that will also protect you while you're doing a certain amount of renovations to the property.
Got it. And then if anyone has any questions, feel free to put it in the chat and we will get to them. Just so
Just
we
no
have
tough ones. I'm
the
just kidding.
harder the better.
You're gonna make me sweat.
um, okay, so you have all these insurance policies because it sounds like you need a lot of them, but someone does get hurt on the job. Like what happens? What does that mean for you as the owner, or is it more on the contractor? How does that work?
Well, that's a good question. So let me take a step back first and say you really should be working with licensed and insured contractors. That's really, really important. Um, if you do not work with insured contractors and subcontractors, you do run the risk of potentially being exposed. Many of these policies that we have discussed do include liability coverage. However, the liability coverage that's afforded to you, the project owner or the flipper, is not designed to replace the workers' compensation requirements. So if you're hiring unlicensed subs, getting some guys from Home Depot, you're running the risk. And for an individual project, there's really not a good solution. I mean, you're really running in a gray area that that could get you in trouble, and we've seen it happen a couple of times. If you run a larger outfit where you're getting actively involved in the construction aspects, then you definitely want to consider having a workers' compensation policy to cover your workers. But just a single flipper, just work with licensed and insured people. And when I say insured, there's two different types of insurance. You want to make sure they have their general liability, the commercial general liability for the construction they do, but they also want to have workers' compensation, and that's an issue. We insure a lot of contractors, and I don't want to say that contractors lie, but I will say that a lot of contractors represent that they are a sole proprietor and they have no employees, therefore they're away from the workers' comp requirement. But when you show up to the job site, there's a handful of people working there with them. So you really want to make sure that the contractor not only has their license, but has both types of insurance policies if they're ever going to have any type of workers there, especially other than just themselves.
Yeah, because otherwise, if they bring on, like I've seen some flippers, especially in LA, when it costs so much to do construction, they're bringing in handymen. So
Mhm.
the issue, so what you're saying is like if someone gets hurt and the person, I guess, running it doesn't have the insurance, they can come after you. That's where
Yeah,
the liability
yeah.
is.
You're playing Russian roulette, and there's
Got it.
not a good insurance solution. And you think about it from an insurance company's perspective, why would an insurance company want to extend protection to a bunch of people that are trying to circumvent the right way of doing things? That's a bad bet from an insurance carrier perspective, right? So
Got it.
you're proving to be kind of a bit of a moral risk. You're probably maybe circumventing permit requirements, you're circumventing licensing requirements, you're circumventing insurance requirements, and so from an insurance company perspective, that's a risky client, and that's a client who probably is more likely to try to, maybe submit false claims or commit some type of, act that would cause damage to the property or cause some type of issue where they try to make a claim and benefit from the insurance policy. So it's just not a good situation. I mean, if you can't work with licensed people and you're doing a pretty serious flip, if you can't work with licensed people and make your numbers work, then it's probably not a great deal.
So you brought up something interesting, and it was actually on my list of questions, which is permits. So people, all over the country, there's stuff that needs to be done with permits, some stuff that's not done with permits. How does that play a role in terms of insurance? Like, does the insurance say, hey, we're not going to cover this because this should have been done with permits, or they don't look into it that far? Like, what is the kind of the general rule there?
So taking the conservative route, you definitely want to consider permits for everything that that municipality requires permits for. That is the best way to be completely black and white and make sure you're on the right side of things. I will tell you from personal experience with many claims that most insurance companies will cover damage to property regardless of permits, but not all do. And if there's a really large claim and it's not permitted, that creates a gray area, a little bit of ambiguity, and you don't want to be working with an insurance company on a claim when there's a lot of gray area or ambiguity. You know, an insurance company is in business for profit, and if they do find that there was some, areas that are gray, they're probably going to lean towards the decision that's going to benefit them and not necessarily you. So, but that said, I've had many conversations with insurance underwriters, and a lot of their consensus is if the property was built or the structure was built with a workmanship-like manner, and is consistent or built with consistent with what the codes were, at least at the time, it will generally be covered. But again, it's a gray area, so you're running a little bit of a risk. Not quite as much as hiring the handyman to do your work, but it is definitely a gray area.
Interesting. Okay. So switching gears a little bit, from a rental perspective, I always have conversations with people like, what exactly is renter's insurance and what does it cover? Because as a landlord, we require it for our tenants, but sometimes we don't know what we're reading. Like, what should we be expecting? What is it?
Sure. So what is it? Why is it important? Well, it depends on who the party is. So we'll answer that from two different perspectives. First, from the renter or tenant's perspective. Highly advisable that everybody who rents has renter's insurance. The biggest reason is the liability protection. So a renter's policy, just like a homeowner's policy, will give you personal liability coverage. And what's really cool about personal liability coverage is that it's worldwide. So wherever you go around the world, you have that liability limit protecting you. Should someone try to accuse you or sue you for any type of bodily injury or property damage. You have auto insurance, which has auto liability coverage. The personal liability basically protects you at all times when you're outside of your automobile. So whether you're on your premise where you live or you're traveling somewhere, it's going to protect you. And a really good story, actually, one of my clients, to see how this worked, client of mine had a renter's policy, and he lived out here in California. He went skiing, I think in Vail, and accidentally bumped someone. Total random accident, bumped someone on the slope. That person happened to be a surgeon, and they broke their hand or their arm, and the surgeon sued our insured. And our client had $500,000 of liability protection under their renter's policy. And so in that situation, even though they were not at their house and it was completely accidental, that renter's policy protected him and actually paid out full limits, $500,000 to the surgeon, because the surgeon, obviously being out of work when they have a broken hand, can't do their jobs, losing a lot of income. So it really is important. If you're not a homeowner and you have your liability there, you should have renter's coverage to protect you, wherever you are around the world. In addition to the liability, it gives you coverage for your personal property. So all your stuff. And it also gives you coverage for loss of use. So if for something happens, there's a fire at your rental property, the home you rent, the policy will actually pay you for any additional living expenses that you incur due to being displaced as well. So a lot of good protection for the tenant. As a landlord, kind of switching gears, very important for a landlord to always require renter's insurance for their tenants. The big part is the only valuable part of renter's policy for a landlord is the liability coverage. Liability coverage, if they have a renter's policy and they damage the property, you can file a claim and take recourse under their insurance policy. So that's good to have. Also, if there was any type of accident or slip and fall, maybe there's a guest at the premise that falls. The renter's insurance liability is also going to provide protection there. It's not necessarily going to indemnify you, the landlord, but it could be the first line of liability protection that the person who is injured would go after. And if they don't have the renter's policy, then they're likely to go after the landlord. So very important for tenants, very important for landlords to make sure that renters is in place.
So could the renter's policy cover the difference of, let's say, a deposit? So, because especially here in LA, right, it can be expensive to do renovations. And more often than not, most people charge 1 month's rent equivalent or 2 months' rent equivalent for the deposit, but it may not be enough. So is that where that renter's policy can come into play to pay off that difference?
Well, yeah, and I wouldn't rely on the renter's insurance
Sure.
in lieu of a deposit. I don't think that's how you were phrasing it, but
No,
I
I'm
would
saying like
definitely
the
want
gap
both.
difference.
Yeah, the big difference is, for the liability coverage and any insurance policy to provide coverage, there has to be fault. So, the issue is maybe the home was damaged, and you want to blame the tenant, and it ends up going to court. Well, if the court doesn't end up finding them truly liable, maybe there was just some circumstance that was, an act of God or whatever, that their policy may not provide coverage. So I wouldn't say to replace the deposit, but again, it also would help you if they did trash the place and the damages exceeded the deposit, then you could call on that policy as well. And typically, the liability portion of any renter policy or homeowner's policy is not subject to any deductible.
Got it. So it might is kind of like the answer, but that's for most insurance policies. Like it might cover the difference.
It could,
It
yes, if
could.
they're truly found to be liable, but it's just an extra layer of recourse that a landlord has
Sure.
should they be harmed.
And look, I mean, correct me if I'm wrong, it's not that expensive for the tenant, right? It's like we're
No,
talking a couple $100 for the
150,
year.
250 bucks a year. Depends on, a lot of times how much personal property coverage the tenants need.
Mhm.
But a lot of tenants just get it to satisfy the landlord's requirement. And one other piece on that, as a landlord, the minimum limit a landlord should be requiring for liability coverage in any renter's policy is $100,000. I think in LA that's a little bit light. I would push for 300 or 500,000.
Hmm.
And if you get pushback, then maybe consider lowering it. But I mean, honestly, if I was renting, I'd probably say 500,000 because, what if they burn down the place in its entirety? 100,000 is not going to usually cover that. 500 would probably do a better job.
Um, okay, so using that as an example, a house burns down, couldn't I call my own insurance policy to
Yeah.
also cover
Do you
that?
want
So
the claim on your record though?
got it.
So, by having a renter's policy, you're going to have two potential avenues of recourse, right? Versus
Got
just
it.
one. Yeah, absolutely. As a landlord, you have your policy and it will perform if there was a fire. But if someone else is to blame, why do you want that on your record?
Right.
Go after theirs first, and then
Sure.
you have yours as a fallback.
Got it. And then as a landlord, like for example, like as you know, I own a condo, so we have that like landlord policy. What kind of policies should people have? And is there any difference between a condo versus owning a house versus a 4 unit or 10 unit apartment building? Like, are there different types of policies? Obviously, the price would be different, but in terms of protection, I guess.
For renters, there's no different policy regardless of what type of unit they go into. So a
Sure.
renter's policy is a renter's policy, whether they're in a big apartment building, a condo that Rick owns, or a single family or an ADU. As a landlord, yeah, there is a difference. So what is important, I would say most of all, is that you disclose to your insurance broker how the property is being used. And so, yeah, if it's a condo, we're going to put you in a landlord condo owner's policy because your obligations as a condo unit owner are different than a single family owner. If you have a single family, then you want to have a dwelling policy, and landlord dwelling policies will usually cover 1 to 4 units. Another important thing too, though, is ADUs are very popular. I think they're kind of a hit with you too, Rick.
Yeah.
So ADUs, there is a difference when properties are separated or attached. So say you have 2 units on your property. If they're attached, they can probably be written under one policy. If they're detached, you absolutely have to have 2 separate policies written for them. Uh,
Hmm.
um, so, I mean, I say the best recommendation is just have a discussion with your insurance broker, and just be open and forthright. You know, tell them what the property is like, how the situation is. If there's an ADU, make them aware of that, because it's not always reflected on property records or on Zillow,
Sure.
which we look at. But the only thing that's important, I think, to mention as a landlord, actually one of the biggest hot buttons for insurance companies these days are the rental durations. So a lot of these rental policies or landlord policies are really designed for long-term rental contracts. But nowadays, the short-term rental is all the rage. And I actually have a lot of my clients that have traditionally been, a long-term lease renters. They're now switching over their units to Airbnbs or VRBOs.
Oh,
Now,
interesting.
that's a big deal with insurance companies. So you need to make sure you're disclosing to the insurance company how the tenant is going to be using it, whether they're a short-term renter, and if they are, is it daily, weekly, monthly, or is it a long-term tenant, 6 month or later or longer contract? Makes a big, big difference in the insurance world.
Is the insurance similar for Airbnb? Is the insurance similar to like a coverage for like a hotel? Because you have different people coming in all the time. You don't know how they're going to act, right? Like one person might trash the place, next one might not.
The insurance industry, we're very slow to change.
Like many industries.
Yeah, and I think insurance, I mean, I really believe that in the insurance industry really kind of subsidizes a lot of the USPS. They love mail, they love very old technology, they're very slow to adapt, and they're just starting to realize that there's this thing called Airbnb. And so we're seeing a lot of the regular landlord policy carriers start to provide or extend coverage via endorsement or rider to provide coverage for the short-term rental situation. In addition to that, there are some commercial policies available as well. You were mentioning like hotels. There are some commercial solutions as well. It really just depends on your particular situation and how decent your broker is as to what type of solutions they come up with for you.
What would be an example of having to use those policies? Like whether it was for Airbnb, when would your insurance policy? Because those let me rephrase that. Better question. Airbnb, they don't get tenant renters policies, renters insurance. So does that mean you're fully responsible, or does Airbnb provide it, or how does that work?
It's a good question. So, there's obviously the big commerce providers, Airbnb, VRBO, or HomeAway, whatever they call themselves this month.
Yeah.
Um, and then there's a lot of property management firms. Actually, we do a lot of business in the Palm Springs area. So we
Hmm.
actually have a sizable book of short-term rentals. And beyond that, there's actually property management companies as well. So Airbnb and VRBO, they do have some insurance protection for the landlords, and I believe that there is an option to also require some type of security deposit as well. So make sure whoever you're hosting with, if you're doing it yourself on Airbnb, then make sure you really read their terms. And I will say that the coverage provided by Airbnb and the coverage provided by maybe property managers that are managing your short-term rental does not fully protect you in almost all situations. In fact, I guarantee it with the Airbnb and VRBO coverage, it's very similar to like the Uber and Lyft coverage. Their coverage only applies when it is occupied or there's damage caused by people that entered into a contract through their platform. It doesn't protect you and your property at all other times.
Hmm.
So even though Airbnb does provide coverage, don't be fooled into a sense of security thinking you're protected and you don't need your own insurance coverage as well. You definitely need to have some type of dwelling policy in place, providing you with fire and liability coverage at a minimum.
Got it. That makes sense. Okay. So so let's say going back to traditional rentals, especially because here in LA, there's so many restrictions now with Airbnb. If there is an issue with the property, how does the insurance company determine who's at fault? Like, how do they know, okay, we're going to take it from the renter's policy versus taking out of your policy?
Sure. Well, so if you file a claim you, the landlord, file a claim under your policy, your insurance company has a duty to perform, and they're going to investigate the claim. And based on the circumstance of that claim, if they believe that there was someone else that was responsible,
Hmm.
then that goes into the world of subrogation. And that's typically done behind the scenes, and you, the policy or landlord's not really involved with that. But what the insurance company will do is subrogation means basically someone else, they believe someone else is at fault and should pay. They'll pay you out of your policy, usually less your deductible that you have, but whatever the loss is, they'll typically pay it out. But then they might go after someone else. If they find out the tenant is, they believe the tenant's at blame and the tenant has coverage, then they'll go after the tenant and the tenant's insurance policy. I actually have a pretty good story of a flipper client that something like this happened to. One of our really good clients was restoring a beautiful property in Eagle Rock a few years ago. And he was about 95% done getting ready to list, just doing the finishing touches on the property. And he had some paint guys doing some paint work over the weekend, or I think on like a Friday, and doing some staining. They were doing like oil work. And Friday, they wrap up the job, and they threw all the oil rags in a bucket and left it in the middle of the property. The bucket spontaneously combusted and burned the property to the ground. And that was scary. That was the first time, I had written a whole lot of, flipper policies at that point in time, but I'd never had a situation like that occur. And so I was kind of like, I hope, come on, insurance company, do what you're supposed to do, but you never know. I mean, you want to, but I mean, it's always a little bit disconcerting. I really hope as a broker, I chose the right company for the client. I hope that we disclosed everything right. And I really hope that everyone did everything they were supposed to do and it's going to perform. And in this situation, it did. I mean, the policy limits were drained. There was not a penny left in the policy because the property was finished. But the painters, as they actually sent out, the insurance company sent out like forensic investigators to really determine the cause of loss, because they knew about the paint and they had some good reason to believe that. And so ultimately they paid out the policy out of their own funds. Our insured was made whole, although he did lose a lot in the investment because of the time loss. He had to rebuild everything. But the insurance company went after the painters, and that's kind of a throwback to what we were saying earlier. Work with licensed and insured contractors, because the insurance company was able to go after the painters, filed a claim under their commercial liability policy, and it was the painters that ended up having to pay for it, or their insurance company. And my investor, he usually has higher deductibles. I think he had like a $5,000 deductible, and so once our insurance company was successful at getting the money back through subrogation from the painter's insurance company, they sent my insured an additional $5,000 check a few months later, reimbursing for the deductible as well.
So how does that work if, because we'll take the Malibu fires, for example, right? 'Cause there were homes just burnt
We had a
to the
lot of
ground.
losses there.
Yeah,
That
I
was
remember
bad.
I couldn't get a
Really
hold of you.
bad.
You're so busy, and I don't blame you.
It's a rough day.
Um,
November 9th, 2018.
oh my gosh. So what's the difference between you cash out from the insurance policy, but then instead of building it, you decide to sell the land? Does the insurance care because they did their part?
No, the insurance doesn't care. However, so makes a big difference as to how much you get paid. So there is an endorsement, a rider, an add-on available on select few high-end insurance policies called a cash settlement option. So we'll take you down a path just a little bit. If your place burns down and you decide not to rebuild, the insurance company, the first check that they're going to cut you is likely going to be what's known as the depreciated or actual cash value amount of the home. And so they have ways of figuring that out based on any intel they have from maybe prior inspections as to the quality, like, and condition of the home. And so they'll pay you a depreciated amount, which is definitely not enough to rebuild the home. And should you choose to not rebuild, that is the most that you're going to get from that policy. You're not going to get the full policy limit. You're not going to get the replacement value as to what it would take to really rebuild the house. The only way that you could get that full amount is one of two ways. One, rebuild the house. That's going to give you every feature and bell and whistle that a policy has in order to make you whole again. But if you have one of these fancy policies that has the cash settlement option, then it gives you the added flexibility to be paid full replacement value on the home without the requirement to rebuild. And so you can take that cash and then you can sell the land, make a little more cash, and then move along. Like we saw some people do.
Yeah.
We have a client, actually, they were in Malibu and they said, F it, I don't want to be here again. I'm going to Canoga Park. I don't know why they wanted to come down this way, but they did, away from the hills, and they bought a house, you know, in the flats after being traumatized from the Woolsey fire.
Wow. Okay, that's all really good. So let's switch gears again. So let's go into house hacking. So house hacking, for those who don't know, it's basically just you buy a place and you're renting out rooms, right?
I think I'm the one who doesn't know in this call.
Okay, so Jimmy, let's educate you. So house hacking, like me when I bought my condo and I rent out the second bedroom, or here I am living in my ADU and renting out the main house. Basically, it's your personal residence and an investment property at the same time, which is becoming more and more popular in LA because of just the cost of living in LA, right? And you can do a low down payment and all that fun stuff. So how does that insurance policy work? Because it's kind of twofold, right? You hold two different roles.
Yeah. Yeah. So, you know, every answer is it depends. So we'll talk about a few different scenarios here. Number one, I really do recommend working with a broker. And it's not just a shameless plug. Okay, it's 25% shameless plug for myself.
That's our limit,
But
so you're good.
yeah. No, we don't want to go over. But work with a broker. And this is why, because if you work with a broker, and I think I've even told you, Rick, what you say to me isn't going to be held against you. And if you work direct with an insurance carrier, you know, or with a captive who's an employee of an insurance company, what you say can be held against you. And you may be discussing options, and they might say, oh, no, not eligible, sorry, denied. Working with a broker, we're not tied to one company. We're not loyal to just the insurance industry. I personally find myself to be loyal to my clients, and I will use the insurance companies to, you know, when they serve our needs and my clients' needs. But you're not going to have any landmines. And the reason why I say that is the biggest piece of advice is be forthright with your insurance broker. Tell them what's really going on. And this is the problem I see with a lot of flippers, actually. Some of the smaller time outfits that are, you know, trying to do their first job, and they are trying to keep their budget cheap, and they're going to Home Depot for the handyman and all that stuff. They'll come and tell me, yeah, it's a rental. Really? I can see on Redfin it's like falling down and like part of the roof's missing. Yeah, it's a rental. Really? And so it's just not good, you know. And so there's got to be a level of trust, and the more information that you give to me, the better I can work to provide a coverage solution that's actually going to work for you. God forbid you have a claim and need to use it. So you're talking about house hacking. Let's talk about, you know, renters in a house. I'll tell you, it depends on the company you're working with. Every carrier has different guidelines. And I'll tell you, some of our companies have a hard, fast no on owner-occupied house and having roommates. It's just a hard, fast no, not a chance. Some have certain limits. They're okay with one or two, no more. I saw one earlier that said no more than 8 occupants in any house. That was kind of excessive. I mean, that's quite the house hacking you got going on there. But yeah,
Why is
so
that?
more exposure. Man, when I first got my house, I was a house hacker too. I had no business being in my house. I bought it when they were giving away mortgages without any qualifications. And I couldn't afford the mortgage. And so I filled it up with roommates. Now, I'll tell you, during that time when I had roommates, man, this house was risky, right? I mean, I remember a roommate and I, we were, you know, lighting spiders with, you know, hairspray torches, and we were having parties. I came home one night with my future father-in-law, and one of my sorority roommates had like 250 people in my house, and the cops were in the driveway. So there's just more risk when you have roommates. And so the insurance companies know that. Just like with Airbnb, you were talking about these parties and stuff. The more people you bring in that have their own motives and agendas, they're not the homeowner. They might use your house like a rental car. So there's risk, and so different companies don't want it. So just make sure you talk with your agent, your broker, and let them know what you're doing. You personally, Rick, we've changed your insurance. As you may recall, you bought this property, and your plans changed several times throughout the process.
Sure did.
And so we'd have a conversation. I'm like, oh, you're living there now and not there. Okay, so we're going to have to switch and write some new policies. Oh, it changed again. Oh, you're not going to be in there. Now both are going to be a rental. Well, we need to change it again. So depending on how you're using it, just make sure that you have an open dialogue with your broker, and they should be able to find the solutions for you. But it just depends on the makeup. Like you, Rick, I think you have your properties, and if you're in the front house, the main house, that house needs like a regular homeowner's policy. But you rent the back ADU, then you need to write a separate landlord policy for it, and vice versa. If you move into the back, then we need to turn that one into a homeowner's policy and do a landlord up front. So it just depends on your situation. But again, just transparency is really important.
So typically, just so so I get it, so if there's 2 units or multiple units, you would need your own personal policy for where you live, and then landlord policies for the other units. But if it's is that right? Did I
Well,
hear that
yes.
right?
If it's now
Generally.
the caveat is if it's attached, right? So say you're working on a
Oh, right.
two to four unit that's all attached.
Hmm.
Um, some companies, and what we tend to do is we will write a homeowner's policy as long as one of the units are occupied by the owner of the property,
Hmm.
and just disclose that there's additional units there that are rentals, because the homeowner's policy form is typically the broadest, most comprehensive form of coverage available.
Hmm.
And so we want to put our homeowner in that policy, but then also have it extend to cover the rental units. But that only works in an attached unit situation, not a detached unit. You need
Got it.
separate policies for each detached building if you have multiple properties on buildings on the premise.
Um, if you're sharing a house, right? So 4-bedroom house, you live in one of the bedrooms, renting out the 3 others. Should those tenants have renters policies?
Yeah, yeah, they should. Sometimes you can sometimes lump a renter's policy together for a few tenants. Um,
Yeah.
I don't recommend it. It can create complexity. I mean, it can fulfill the obligation of needing insurance, and so it's good there. But there can be complexity if, you know, if someone has to file a claim. Like, say, one area that wouldn't work if you combine a renter's policy. Say one of your roommates trashes your MacBook. Well, there's a clause in there. They're technically an insured just like you are. So an insured, there's no coverage for an insured damaging property of another insured under a policy. Now, if they all had separate renters policies, then that MacBook would have been covered. So, perfect world, you all get separate renters policies. And if you're a landlord and you're renting out each room separately and you're having separate contracts, I mean, you should treat it just like a standalone rental property, right? Separate rental
Mhm.
agreement, and build in a clause in that rental agreement requiring that they maintain their own renters policy.
Got it. Okay. So let's talk about just like general insurance. Totally off topic, but out of curiosity, and we haven't talked about this before, because of COVID, has like the auto insurance industry like totally been making bank because no one's been driving, but they're still collecting the premiums? Okay, I thought so.
It's a joke. It's a joke. I hope no insurance carrier is listening to
I
this.
know, right?
But yeah, this whole auto insurance refund thing, my personal opinion, has been just the world's worst marketing ploy that's just given me a headache and all insurance agents a headache. The fact is people are driving a lot less. Me personally, I sold my car in April and I haven't replaced it yet. I'm here in my home office, if you couldn't tell. And this is as dressed up as I've gotten in months. But I
I
sold my
feel honored.
car. Yeah, you should.
Yeah, I'm sure it's just the waist up, but I'm honored.
Yeah, maybe it could be. That's one of the perks of working from home. But
Hmm.
I sold my car. So back in the pre-COVID, I mean, my wife and I we go through probably each go through a tank of gas every 4 or 5 days,
Yeah, same
each.
here.
Now we have one vehicle since I sold mine, and we probably go 2 to 3 weeks between a tank and just the one vehicle. So,
Right.
the average auto insurance company has given about a 15 to 20% discount.
Hmm.
I can tell you personally, I'm driving much less than 15 to 20%. So the insurance companies are, they put that PR stuff out. Actually, a couple of them did. And I think a lot of the
Yeah.
insurance companies got mad. And actually, the state of California kind of caught on to it and said, hey, State Farm, you're doing awesome. Let's, you know what? We're going to make a law. Every auto insurer in California has to come up with a refund plan by August. And so you had a
Wow.
lot of companies that were dragging their feet and didn't want to give any refunds, but the
Sure.
state was forcing them to. And then when they came out with it, there was just a lot of frustration and disappointment. I think the problem is, someone like State Farm or Progressive. Progressive's like, we're giving $2 billion back to policyholders. And you as an average consumer, you see the commercial like Flo said $2 billion. Well, shoot, I should be getting my insurance for free then. Well, if you divide $2 billion by the amount of policyholders, it works out to about 50 to 150 bucks per policyholder. And so here we are being bombarded by people who are seeing the commercials about these discounts. And then once the check actually comes, they're yelling at us because it wasn't nearly as much as they were hoping for. And so it's really caused a lot of headache. It's caused a lot of bad blood.
Mm.
And it just, I think it's been kind of a marketing stunt, kind of gone wrong, in my
Yeah.
opinion.
Yeah. I mean, and that makes sense. I mean, you could also make the argument that they didn't have to do anything during this time, right? So it's like, I could definitely see both sides. I think a discount was definitely warranted because
Yes.
they're still way ahead of the game, especially because, to your point, you're the third person I've talked to who sold their car.
Yeah.
Like, if my wife didn't have to drive as much, we've talked about it. We talked about getting rid of one of the cars. Like, why? What's the point?
Yep.
So it makes
Yep.
sense. Have we seen anything else happen in the insurance world because of COVID outside of the auto industry? Or is it no, 'cause people are, okay, because people are staying at home more often?
Yeah. I mean, the commercial insurance world is a mess. The big issue in the insurance world is that these businesses wanted to file loss of income. So they were either forced to shut down or they chose to shut down, or their business, if they stayed open, just evaporated overnight.
Hmm.
And a lot of these people, most business owners have a business insurance policy with loss of business income should something happen. And the really sucky thing here is that there's a very specific exclusion to viruses and pathogens in the policy. So
Ouch.
coronavirus and other like viruses is not a covered peril. And so the businesses have been hit really, really hard. And it really stinks, to be the bearer of bad news, telling someone, I appreciate that you did the right thing and bought the right policies to protect yourself, but there's an exclusion there. And so that's really been, I'd say, the biggest black eye with related to the insurance industry and COVID.
Can you
One
get
other
that as a
thing,
writer?
um, there is some specialty custom written policies available,
Hmm.
but as I've been seeing, I've never written one of those. They're pretty few and far between.
Yeah, I'd imagine
They're
so.
very expensive, and then the information I've been seeing is that even a lot of those carriers are trying to balk on those claims, and so there's a lot of litigation going on right now, a
Hmm.
whole lot of litigation, and there's been some threats from regulators stepping in. The truth is the insurance industry doesn't have enough collective premium in their reserves to pay out the amount of income that's been lost by all these businesses. It's just not
Hmm.
there. If the insurance industry truly had to pay for it, the industry would cease to exist.
Hmm.
So,
Except, yeah, I get
yeah,
that.
yeah. But there's
Okay.
been a lot of life insurance business too. My wife does life insurance. she's been very busy. Just people knocking on the door, obviously thinking about mortality, and a lot of people questioning is
Sure,
if
we
they
did.
die of COVID. Yeah, if they die of COVID, can you still get coverage? Is the policy going to pay? Which it does. Yeah, COVID's covered for life insurance, not so much for business insurance.
Okay.
Yeah.
So, how do you maximize the best value for an insurance policy, right? Because I mean, especially with my clients, what I'm doing now is I'll review their insurance policy because more often than not, and correct me if I'm wrong, the lenders end up requiring way less coverage than what's actually needed. Like the replacement cost is usually so low when it should be higher. So how do you navigate through that and finding the best value?
Um, okay, now we're going to 50% shameless plug.
Okay,
Use an insurance broker.
I'll
You
allow it.
know, use an insurance broker. One size does not fit all. And insurance brokers have access to the widest variety of insurance programs available. So working with a broker, you're going to find the best solutions. It's in my best interest to provide you with a competitive solution. But also beyond that, I mean, such from a competitive standpoint, beyond that, you know, I mean, I think if you're a property owner, I think one of the most underrated pieces of coverage that most people don't go with is umbrella coverage, personal umbrella liability coverage.
What exactly is the umbrella? What is that?
Umbrella coverage is liability protection. So it sometimes called as lawsuit coverage. Lawsuit cover, I mean, it's very, very important. If you own a home, definitely if you're a landlord of any sort, you absolutely want personal umbrella coverage. And what it is, it's an extra layer of liability protection. Usually runs in $1 million increments. 1 million to 5 million is really easy to secure. It's very inexpensive. $1 million of umbrella coverage can cost $200 to $300 a year. And what it does is it sits on top of your auto and home and landlord policies. So say you have an auto policy and a home policy and a landlord policy, and they all have $500,000 of liability in them. Chances are, if you own two pieces of property in Southern California, your assets are going to be well above that $500,000 liability limit. So you throw a $1 million umbrella on top of that, you're now protected up to 1.5 million. And so should a tenant try to sue you, should you be in an auto accident and someone try to sue you, your primary policy is going to protect you up to the limit, let's say 500,000, but maybe they're suing for $1 million. They're Dr. Evil from Austin Powers and they want $1 million. You have the umbrella. So say the $500,000 in your landlord policy gets exhausted, you still owe $500,000 more because they sued you and were successful in getting a judgment against $1 million. Your landlord policy is going to pay out 500 and it's going to give you defense cost as well included in there. And then your umbrella is going to kick in with the next dollar of coverage. And so for just a few $100s a year, the insurance company is the one who's going to be on the hook. And they're going to defend you vigorously because they don't want to pay it either.
Right.
But it would prevent you from having to liquidate your assets to satisfy a judgment. So it's a very inexpensive solution to protect everything that you've been working so hard to build.
Got it. So let's say sometimes insurance companies tend to drag their feet when it comes to, let's say there was some damage to the property. All right, we'll get to it when we get to it. Or they make you jump through all these hoops. What are some ways to really light a fire under them, to really get them to get it done quickly, how to get ahead, so to speak?
A few things.
If there is a way.
Yeah. I mean, a few things. So number one, before even opening a claim, I usually will recommend that my clients contact me. So contact your agent or your broker and have a discussion about the claim first.
Okay.
I don't recommend just running to, if you're in a car accident at night, call the insurance company and file your claim. But if you have an issue at your home, you have an issue with the tenant or your rental property, talk to your agent first, get some insight. That's helpful. Too many people file claims that may not be covered at all or are below the deductible. So it doesn't even make sense filing a claim. And so that can be an issue, but talk with your broker. And I would usually recommend a couple of things. We'll do a coverage review and we'll look at their deductible and see what they're dealing with. A lot of times people will go to file a claim before they even really know the true scope of their damage. They're like, I've got a water leak, file a claim. And so the best thing you can do, bring someone out to look at it. Bring a professional, a plumber, a contractor, whatever the cause of loss is, bring a professional out to give you an assessment and ultimately an estimate. So you know what you're working with and you know what the cause of loss is. You know, like with water, that's a big one with water, right? Figure out where it's coming from, figure out how to shut it off, figure out approximately how much damage you're dealing with. If you have a $2,500 deductible, you have $1,000 in damage, don't run to the insurance company and open up a claim. It's not going to help you. It's going to be just more of a pain in the butt. But if you do open a claim, again, you already have some information from an independent third party professional that has given you an assessment. And that's important because the insurance companies, you know, I believe that most of them will try to do a good job, but they're going to send in their people, right? They're going to send in their remediation people, their professionals, and those professionals are being paid by the insurance company. So there could be some type of conflict of interest, right? You know, let's see what's happening with the water claim. It looks like it's not our fault. Oh, our professional says it is. So you bring in your own expert, you have a write-up, and you can rely on that. And you say, I disagree with you, insurance company. Here's my documentation that shows otherwise. So that's a good important step. Also, I recommend communicating in writing. Email is awesome, right? I tell you, claims adjusters' voicemails are just like a purgatory. They'll never, it's an abyss. They'll never get to you. I mean, they do, but I mean, if there's a catastrophic event, you're going to be delayed. So send emails. You have a written paper trail trying to solve your issue. And claims adjusters, they do have their statutory guidelines, you know, state law in place dictating how responsive an insurance company has to be and what type of timeframes they have to act within. So if you're just calling and leaving voicemails, it's hard to prove that. If you're sending an email over and over and over again, first request, second request, third request, you know, it's kind of sad, but sometimes the squeaky wheel gets the oil. So do it and do it in writing. If all else fails, if there's something really big going on and the insurance company is not performing, there is the last ditch effort, which I would say would be a public adjuster. Public adjusters are intermediaries that can help a homeowner or an insured get a claim paid out and paid out to the maximum limit possible. They do charge a fee for it. I would never recommend that you start off a claim with a public adjuster. Public adjusting, there's a lot of ambulance chasers in that industry. There are a lot of them are garbage. We do know some reputable ones, and we do recommend them on occasion to go after our own insurance companies. Doesn't happen too frequently, but it is an additional path of recourse that you have, and kind of a last ditch effort. You know, either public adjuster or maybe an attorney. Sometimes insurance companies need to be motivated with a little bit of a legal threat, but that's not the norm. Thankfully, I really try to align myself with carriers that do what they're supposed to do.
Sure.
And I try to have good conversations with my clients so I can best understand their risk and write the right coverage for them. And so if all that's done right, we typically see claims handled in a way that we don't hear too many complaints. But things do go sideways sometimes. And so that's what I'd recommend.
It happens.
It does.
Yeah. So so let's say I'm like next year, my goal is to buy another place. From an insurance perspective, what should I be looking at when I'm out looking to buy houses?
You know, I would say just start the process early. If you're looking at a house, if you know an insurance broker, or you need, get to know one, and you can run property addresses by the insurance broker. And maybe consider even before you write an offer. Now, usually there's a contingency period within the contract, so you can back out if there's problems. But run these addresses by a broker, by an agent, and what we can do is we can verify the insurability. Here in California, fires are a big deal, right? So everything is a fire zone these days. Even I get complaints all the time. What do you mean I'm in a fire zone? I'm nowhere near a fire zone. Well, I got 15 insurance companies that disagree with you, unfortunately, and they're not going to write a contract. So that's a big issue. And also prior claims. Claims history is becoming a bigger, more challenging issue.
On the property?
On the property, yeah.
Okay.
Yeah, and it sticks. Back in the day when there was a transfer of ownership, the claims that were on a property typically got wiped away and not held against the new buyer who was trying to get a property policy. More so now, the claims are sticking because like water is very, very challenging. I'd say about 7 out of 10 claims that I open for my clients are water, like non-weather water claims, pipe bursting in the home. And so it is a big deal. And so what we'll do for our clients, we do a couple things, that not all brokers do. We'll check for the brush eligibility and make sure that it's going to stick, and that we can actually bind a policy. And then we'll run a claims history, sometimes known as a clue report, on the property too. That way, we make sure when we give a quote to a client, it's a bindable quote that they can use. They can rely on those numbers, and it'll be in place in time for their closing. Not all insurance people do that, and so I can't tell you. I get a couple clients a month. This happens in the Santa Clarita Valley. With one particular insurance carrier, which will remain nameless, but they'll spit out quotes all day long, and we'll call them up and they'll say, yeah, no, thank you. I don't need a quote. I've already got my quote with so-and-so. I said, great. That's awesome. I'm still going to give you a quote just in case things don't work out. And more often than not, escrow orders the insurance from that other company, and the other company goes, oh, I'm sorry, we can't honor this quote anymore. It turns out that property's in a fire hazard area. I don't know what changed with the property from the time that they quoted it until the time that they went to go issue it. But, you think that someone would have done a little bit of work to figure that out in the beginning and not waste everyone's time.
That's what it sounds like. It sounds like they just said, hey, here's the policy, without doing
here's
the
a
due
quote.
diligence.
Yeah, here's a quote. Yeah. What a waste of time for everyone.
Oh my
The
gosh.
agent included, right? Like, what's the point?
It happens in the mortgage business too. It's a difference between a pre-approval and a pre-qualification. I had a client do that recently. Oh, well, I talked to the loan officer. Well, we didn't look at any of the assets. I'm like, we just wrote an offer in a super competitive market, and you're a big time lender. You're telling me you haven't reviewed it? No, we trust our clients that they told us the right information. I'm like, are you kidding me?
I lose out a fair amount of auto insurance business because I'm a big believer in running all the reports. I believe in accuracy. Let's be accurate and real. And that's not something that a lot of insurance brokers do. They'll do this kind of bait and switch tactic where, hey, how's your driving record? Great. Just like their credit, right? How's your credit? Excellent. What about the BK last year? And so I'm a big believer in running reports. I run, driving records, I'll run claims records, and I'll be accurate. And so you may not like the numbers that I give you, but I'm giving you real numbers. And sometimes I lose business that way, but that's okay.
Sure.
If people are going to be that scrupulous and chasing, the shiny thing over there because it looks cheaper, well, they're going to get what they pay for, or it's not going to work out. It's going to blow up in their face. And it's probably not an ideal client to work with anyways. We really work with a client that's educated and understands the value in what they're purchasing.
Okay. Well, that actually kind of wraps everything up. Is there anything else we should be aware of, for the real estate investors out there who currently are investing, want to get into investing from an insurance standpoint? If you had to sum everything up, what is the one thing they should know besides getting a hold of you?
You know what? Working with a broker and just having an open, honest, transparent, relationship transaction. Just let them know, let your insurance company or agent know what's going on, what your intentions are. If you're house hacking, how that looks. There's a lot of different ways to go about investing and developing and house hacking, all these things we spoke about. Just make sure you're open and talk about it. Otherwise, if you try to hide and disclose things, we can probably still get a policy written for you, but it's probably not going to be worth the paper that it's written on should something go wrong and you need to file a claim. Other than that, one important thing I didn't touch on for investors, if you're a landlord, super important coverage, probably as important as the umbrella coverage, is something called personal injury. Personal injury coverage is an add-on to the liability coverage. And we include that with every landlord policy that we write, provided it's an option with a particular company. But what personal injury is, it does something that does nothing like its name sounds. It includes wrongful eviction. And so regular liability coverage doesn't include coverage for wrongful eviction, and that's a huge exposure for landlords. So I would say if you're a landlord, make sure that your policies always include personal injury coverage. Otherwise, you might find yourself in a tough spot.
When does that kick in? Let's say, for example, I know I'm going to start the eviction process. Should I get the policy then? Or is it one of those, you get the policy and you have to wait 6 months before you can start using it?
The personal injury is included in your landlord policy, so you should have
Okay,
already had it.
got it.
So if you're an existing landlord, I would recommend that you have a talk with your insurance agent and make sure that personal injury is already included. It's super cheap. It could be a few dollars a year, maybe 10,
Oh, wow.
$20 a year.
Okay.
Yeah, very, very inexpensive, but super vital. And so I would say if you're an existing landlord, talk with your agent, make sure it's included. If not, any decent agent that's worth their weight should be talking about it or automatically including it in any quotes that they put together for any landlord clients.
All right. Well, thank you so much for this. I really appreciate
Yeah,
it. It's been fun. Got a lot of good
we
stuff.
survived.
We did. We did all right.
Tony, man, he's hung in there too.
Yeah,
Thanks,
I
Tony.
appreciate it, especially with all the kind of glitches that we had earlier. So, how can people get a hold of you if someone wants to talk about insurance, investing, all that?
Good question. Well, my company is VOI Insurance, VOI Insurance.com. It's our website. Phone number 818-435-8225. My email, Jlewis, Lewis, at VOI, that's VOI Insurance.com.
Great. All right. Well, thank you so much. You have a great evening. Thank you for everyone that listened, and I'll talk to everyone soon.
Thank you.
Cool. Thank you.
All right, have a good night.
Bye.